For an entry-level investor investing into the Dubai real estate market for the first time, it can be very overwhelming when it comes to choosing the right project. And one of the worst things for an international investor is realizing further down the line that they're trapped in a project that may not be necessarily a good investment. That's why in this video, we're going to give you the complete framework for investing between a 1 to 2 million dirham budget in the Dubai real estate market, because this is where we're seeing a lot of inquiries come through at the moment from first-time investors that need to understand the market in a bit more detail. And by the end of this video, you'll have the knowledge to avoid most of the mistakes that first-time investors make. For those of you that are new to my channel, my name is Matt. I'm a real estate consultant here in Dubai. I help investors from all over the world invest into the Dubai real estate market using data and reports. And today I'm joined by Salem, who is also a top agent and has lived in Dubai for over 20 years.
It's my pleasure.
Okay, so Salem, I know location's a very general question, but it's obviously the first question that comes to a lot of international investors' minds when they're looking to invest into the Dubai real estate market, because location, when it comes to real estate, is one of the most important things.
Yes.
So with that in mind, what would you say are the locations that you should be looking at when you're an entry-level investor with, say, 1 to 2 million dirhams?
Yeah, 100%. I agree, Matt. I mean, location is one of the most important pillars when it comes to making a property investment in Dubai. And there's really a few things that you need to look at in terms of location. One would be the infrastructure. What infrastructure is coming there in that area? For example, metros, malls, anything that will add value to that area. Secondly, would be the proximity to the main epicenters. We've got 2 epicenters in Dubai. You've got downtown, you've got the marina. And the third future epicenter, which is going to be Expo City in Dubai South.
Yeah, 100%. What I think about the Dubai market for first-time investors is that they need to understand that point that you just mentioned in terms of there is 2 main epicenters of Dubai, downtown and then marina. And it's not like they're right next to each other. It's around 30 minutes away from each other. So when you look at cities like London, where you've got central London and then it expands outwards from there, you need to understand in Dubai that there is those 2 locations. And you're always playing it safe when you're basing your investments around these 2 existing locations. And in downtown's epicenter, that can obviously be a contributing factor to that is obviously DIFC, Business Bay. You've got all of the stuff happening in that location. It's not necessarily just downtown and the Burj Khalifa. Same with Marina as well. You've obviously got the Palm Jumeirah over that side. And you've also got JLT, which is a big business hub. So what do you sort of think would be a good strategy to start with in terms of investing around these locations and acquire into a certain demographic of people?
Yeah, and of course, you know, you've got your 2 main epicenters in Dubai. Now, just to follow up on what you mentioned about downtown. So obviously, you've got most of the commercial activity in Dubai happening in those areas, but that's prime real estate, and it is pricing out a lot of people who are working there.
Yeah.
So for a lot of them, they need to look at more affordable locations that are still close to these main hubs. And then you've got your areas like Arjan, JVT, Sports City, Motor City, and JVC that are 20 minutes away from downtown, Business Bay, and DIFC.
Yeah. And you see these locations that you've mentioned as well, they're 15 minutes away from Dubai Marina as well, which is the second epicenter that we're talking about with the JLT, DMCC free zone. That's also a big selling point for these sort of central locations, being priced out of downtown and then being able to commute to both areas of the city. It's opening your tenant demographic to both of the locations rather than almost limiting it to one. So let's talk a bit more about these central locations: JVC, JVT, Arjan, Sports City, Motor City. You've even got Production City. These locations there's a lot of projects that are coming to the market in these ones, especially JVC. There's a lot of handovers that are happening there in the coming years and a lot that are happening now. What do you think that the selling points for each of the different locations are? Do you think that one stands out compared to the other, or do you think that they're all very similar?
So look, those areas are all very close to each other, but they all kind of have their own unique selling points.
Yeah.
So if you look at Arjan, for example, the reason why I favor Arjan a lot, and even Motor City, is just because they're predominantly made of low-rise buildings. So there's really 2 main things that you benefit from having a low-rise building. One is the fact that there's a lot less units in the building, which means your competition when you come to renting it out or potentially selling it in the future is a lot less. And secondly, it gives the community a much nicer feel and prevents any traffic issues in the future from the area being too heavily populated. I kind of want to add a controversial take about these areas. So you've probably seen a lot of brokers or maybe investors pushing Dubai South. I personally believe, I know we both believe that these central locations will actually benefit from Dubai South more than properties in Dubai South.
Yeah.
If we look at properties in Dubai South, your only main tenant demographic is going to be people working in Dubai South. Now, these central locations that we talked about, they're still 20 minutes away from Dubai South, but they're still 20 minutes away from the other part of the city like downtown and Marina. So you're still benefiting from the long-term vision of Dubai South without limiting yourself just to the Dubai South demographic.
Yeah, I do think that's a good point. I think that Dubai South has its own sort of selling points, and you are sort of limiting yourself to that sort of demographic in Dubai South. Obviously, you have got the Jebel Ali free zone, which is one of the biggest free zones, but that's not to say that these people living in the central communities can't commute to Jebel Ali's free zone, especially when you consider the location of these Dubai South properties. They're still 15-20 minutes away from the Jebel Ali free zone itself. So we've narrowed it down to those central locations then. You do like those as an area purely because you can commute to anywhere in the city pretty much. Yep. I do also like DLRC. I do want to add that in there. 100%. DLRC is up and coming massively. Yeah. It's obviously next to Academic City. It's next to Silicon Oasis, which 100%. Is having a lot of investment. It's part of the 2040 vision by the government as well. Yeah. And it's on Al Ain Road, which directly takes you to downtown within 15 minutes.
And you look at your neighbors, it's all of Dubai's premium townhouse and villa communities that are built by the government developers. So you're looking at 5 to 10 years, that area is going to be really developed.
Yeah, there's a lot of jobs coming in that location as well 100%. With Silicon Oasis and Academic City as well. Yeah. You know, the students in those areas, they're going to be, you're going to university in Dubai, you want to live the Dubai lifestyle a little bit more whilst living, you know, in a nice community. So I think DLRC is also up and coming very much so. And there's good opportunity there. So let's talk about developer then, because I know that investing into these sort of locations, you know, JVC, Arjan, the central locations, DLRC even, or Dubai South, anywhere in the city, you know, developer is very, very important. Quality matters, especially when you're in these locations where there's a lot of competition, and you need to stand out, because what I've seen is rental prices in these locations differ massively 100%. Based on projects, right? Yeah. So when you're investing into these locations, what do you think you should consider when it comes to a developer?
Yeah, and I agree, because even if you invest in a good location, if you invest in a bad developer, that can still massively hurt your investment. So for a good developer, it's really a few things that we need to look at. Number one, look at their past track records. If they have delivered buildings in the past, how is their construction quality? Because construction quality is extremely important, because if nobody wants to live in your property, then that means the rent or the price that you can charge for it is a lot lower. Now, that doesn't mean per se that it's bad to invest with a newer developer that hasn't potentially delivered anything in Dubai yet. For a newer developer, I would look at the contractors that they're using for the project, and potentially maybe any properties they handed over in international markets outside of Dubai.
Yeah.
Now, the second thing, part of their track record, how consistent are they with their delivery times? Mm-hmm. So, for example, if you know that the developer has a very bad track record when it comes to delivering their projects on time, then it wouldn't necessarily make sense investing with them.
And I just want to go back to the point that you've just made about their previous projects, because I think when you're looking at a developer's previous projects, you should also look at the rents that they're achieving in their previous projects, because, you know, that will be a massive indicator to show you whether people actually want to live in their buildings. And that will consider things like quality, because it all appeals to the end user at the end of the day. If the developer's got a track record of providing end users with an elevated experience, then you know, that gives you the trust that they're going to do it again and again. So that's another sort of point that I would say you can look at in terms of quality. Maybe you might not be able to go to the building and look at the quality, but look at the rents that they're achieving compared to other buildings in that location. That's also something I think is very important.
And the prime example of that is a developer that we really like, that's called H&B Homes. Now, if you look at H&B's apartments for a one bedroom, those are renting out between 90 to 100K per year.
Yeah.
Now, if you look at the average in Arjan, that's renting the one the one bedroom rents out for around 70,000 dirhams per year.
Yeah.
So you're talking about the difference between 25 to 30% purely because of how good the construction quality is in the H&B building.
Yeah, so the first thing that I think is a bit of a trap in Dubai from a broader scale is you'll see the lower quality developers, not to name names, but they are the ones that are doing the most marketing is what you'll see a lot of cases. And, you know, that's a big red flag for investors because first of all, I think that you should be speaking to a consultant who understands the market. You know, going just off of an ad is very dangerous.
Yeah, especially those renders. Every single developer has good looking renders, but when you look at their actual delivered projects, it's nothing like the renders.
Exactly. And that's another thing, you know, like you just mentioned with HMB Homes, they have one of these pictures that I've seen and it's render versus what they've delivered. And it's, you know, it's very, very similar. So when you look at these lower quality developers, it's important to look at what they've delivered, like you've just said. And then another thing that I would say is, you know, when they're offering these guaranteed ROIs or maybe extremely flexible payment plans, I would be asking the question of why are they offering these rather than that seems amazing, let's go for it, you know?
What's your thoughts on the 1% payment plan?
Yeah, so like I say, in terms of cash flow, it can be amazing for an investor in terms of affordability for them. You know, it's just 1% every month. You know, for a lot of people, that's easily achievable. However, what you will see and what you have to make sure is that the overall value of the unit compared to others in that location, you need to make sure that you're not overpaying because a lot of times we'll see different developers charging a premium just for these attractive payment plans. That's not to say that all these 1% a month payment plans are terrible, you know? You've got to look at some developers are amazing with these 1% a month payment plans. It's really being smart with who you choose and how you invest with these sort of developers. When you're investing bigger amounts of money, you don't necessarily see these 1% a month payment plan in the villas and townhouse sector of the market. It's more of a, you know, newer developers strategy to attract business. So that's something I'd be careful about.
Yeah, and I agree. Look, we've looked at location, we've looked at the developer. Now we need to look at the actual property itself because this is one of the most important things that we can look at when investing into the property is the layouts and the floor plans. Now,